Hello fellow traders. In this video I'm gonna be discussing a very powerful way to use the Fibonacci retracement, and how to use it to become profitable. And before I continue, guys, if you like the content, go ahead and hit that like button for me. That supports the channel. And I'm gonna be uploading many more videos that are gonna be helpful in your trading journeys. If you like that, go ahead and subscribe so you can be up to date with the latest uploads that I make. So let's get back right into it, guys. So the strategy that I'm going to be discussing today, I actually don't even see it anywhere on YouTube, and it may be somewhere, but I see many Fibonacci videos, but this particular strategy that I'm gonna show you here is gonna blow your mind, and it's like no other that you've seen on YouTube. Okay guys, so let's just get right into it. Alright, so for those, this is more of a intermediate trading strategy. So if you are a beginner, you can follow along. I'm going to be making more Fibonacci videos to break down the Fibonacci even more, to the most simplest terms, so you can become profitable with it as well. But let's just go into it. So for those who have used the Fibonacci or who are familiar with it, you probably already know somewhat how to use it, correct? Alright, so let's just go ahead and look at this Amazon chart. This is an up-to-date chart, and this is a daily chart of Amazon. So if you were to place the Fibonacci on Amazon from its for a swing move up, where would you have placed it? Alright, so let's get to it. Alright, if you said like this, right? Gotcha. So look, take a look at this Fibonacci and take a look at how it is presented here. So you would have had it correct in your placement of the Fibonacci, and the rules for placing the Fibonacci is it must be a trending market, number one, and number two, once you recognize that it's a trending market, you go ahead and mark up from the trend low to the trend high levels. Alright, so from the last low that was under the last high on up to the highest point, because it's making, as you can see, it's making higher highs. It made a higher high here, made a higher low, so therefore this is an uptrend at that point anyway. But I'm here to tell you guys, you're doing it wrong, and there's a better way to use this Fibonacci that's gonna blow your mind, and I'm actually gonna get right into it in this next slide. Take a look here. So the correct way and the best way to use the fib extension, the fib retracement, is to utilize the trend line that comes with the fib as your trend line, and you combine this with the Fibonacci. So instead of placing your fib from here to here, do you see what I did here? I placed the fib from here and I made it a trend line that connected these points here. And to make this trade a valid trade, and to make this markup valid, you need at least 2 points on that the trend line touches for it to become valid. But once they touch, you do have a valid, powerful Fibonacci strategy that I'm going to show you here. So instead of placing that fib straight from here straight to here, which if you look at most all videos, and I don't knock on any of them or anything like that, they didn't know. A lot of people just don't know this. This is advanced stuff here, guys. Most people would place it from here straight on up here, but the correct way is to use the trend line that comes with your fib in your favor. Alright guys, so as you can see, and I placed it over enough to where this trend line became valid. Okay, now once price broke it, as you can see here, it immediately came down, and in this case it went under the golden area, which would be the 50% or the 61.8% retracement levels. And just a little small recap for beginner traders, and I'm gonna, like I said, I'm gonna make a video about that. The 50%, 61.8% levels are a very powerful level in a trending market. Price tends to want to come down to this level before continuing this move up in an uptrend. All right, so when the stock pulls back off of its highs, it typically wants to find either one of three levels: the 23.6 level, 38.2 level, or the 56.18 level. Okay, all right, so as you can see, guys, once price got down to this trend line, it was off to the races to the bottom, guys. It just went down straight from there. All right, I'm gonna give you another example of this. Okay, this is an example of Peloton. All right, so take a look at this chart. Now, like I said, typically you would just place your fib from here, from the lowest point all the way to the highest point, in no particular fashion. But if you take a look, and you will see, okay, you got some markups here, you got a markup here. Like I said, you need at least two touches, and you go on through. At least two. The more touches you have, the more stronger and more powerful this trend line will become. All right, and as you can see, once you have found the top and once price starts to retrace, that's when you go ahead and mark this up, mark the trend line up in the proper order, in the proper alignment, to where you get at least two touches here, and you just wait on price to react to that level. And as you can see, as soon as it got down to this level, it went straight under. And actually, you would have got about, it went under at about $115, $116, went down to $110. That's a $5 move. Huge profits. If you're holding overnight, if you're doing options trading, if you're doing share trading, either way, it's a huge move. And as you can see, it reclaimed. But take a look at this. This is what shows you that this area, this line, is respected. If you see this area here, how price respected it. It went up, rejected, went up, rejected, went up, rejected. So it's a reason for that. This line is highly respected. You see, it went under, it came up, but it could not break it. But it kept coming higher, but it kept just holding the trend line. So that's telling you that this is a powerful line in the market. And as you can see, it finally rejected and it went down. And you could have got anywhere from, from the 123, if you took an entry 123 down to the golden zone, which I told you price makes a habit of going to. That's over $20 in price movement. Okay, got over 20%, or nearly 20% movement. All right, guys, so that's another example of how to use this Fibonacci in combination with the fib trend line that is attached to your Fibonacci. Okay, let's go to the next example. Now this is going to the downside, guys. So you can use this strategy on an up move or in a downtrend as well. Okay, so I'm going to walk you through this trade. As I said before, you need a minimum of 2 touches. If you have 2 touches, it goes on through. Okay, so let me go ahead and walk you through that. You got one here and you got one here. So you have your criteria, all of your criteria is met to go ahead and pull this through. Once you have the top and you have the bottom here and you see that price is starting to retrace upwards, this is when you will go ahead and pull out this fib and go ahead and align the trend lines to meet the rules that I just spoke about. Alright, so as you can see, once price, price played around down here and moved here, moved around, but once it broke, you actually got a nice sizable move. And then on top of that, it came down and it retested the trend line here. It retested before taking off. And guys, like I said, this is very, very powerful. Guys and girls, this is very, very powerful. And you see it went up to the 5618 retracement zone that I spoke of earlier in the video. This is a very powerful area, guys, and I'm going to make another video that outlines just this. But as you can see, price, had you taken the breakout and had a tight stop, you could have a stop, just below structure here, you would have did very, very well. From about about $104, $105 up to almost $130. Huge move, huge profits, guys. This is powerful stuff if used properly. Okay, let's go to one last example. Okay, so now we have here, just a blank chart, and I want you guys to kind of see if you could practice placing it. And this is what I'm going to show you with this example. What I'm going to show you here is how, if you are a trend line trader, if you like to trade using a trend line, I'm going to show you the power of this strategy and how this can stop you from getting faked out. You ever draw a trend line before and price breaks over it or under it, and as soon as it breaks over it or under it, it rejects and goes back the other way, a total fake out. So you're like, okay, well, wow, it broke the trend line and then it turned right around and went the other way on you. So using this strategy that I'm going to show you will reduce your chances of being faked out. Okay, guys, so we're going to use the same strategy as before. You're going to use your fib. You found at this point, you see it made a higher high point, and that's where you would mark your fib from swing low to swing high. And so sorry about that, guys. And you're going to go ahead and align your trend line to where you get at least two touches. You got one, you got two, and I'll mark it up to make it easier on the eye. 1, 2. You got two touches. So once you have those two touches, 1, 2, go on through. So basically once you saw this point here, it made a high, and then you see it starting to retrace down. Now the rules that I live by is that you would mark up your Fibonacci once price touches the 23.6 level, because that tells you that price is ready to kind of retrace. Because sometimes now, if you prematurely mark up your fib, you'll be marking it up, but then price continues to go higher without much of a pullback. So the rule to even draw it out is to first have price. If price goes down to the 23.6, it doesn't have to close under it. As long as it touches the 23.6 retracement level, then you go ahead and mark up your fib level. Okay, so basically once you saw price get right here, then you go ahead and mark this up. You mark your trend lines here, and now you wait. Now this would show you, this is going to show you how you could have avoided a fake out. Now if you notice, if you were a trend line trader and you didn't have this fib here, you only had a trend line going from here on up on through, now you would have got faked out, right? Because you saw the trend line got broken and then price turned around on you, got broken again, and price turned all the way around. Well, here is the explanation on that. when you're using this strategy, when the 50 and 61.8 levels are where your trend line would be, this is a high probability of a fake out area. Anytime you have the trend line going through the 50 61.8 area and prices also coming to that area, there's a high chance that it's going to be a fake out. And as you see, because it's within this 50 to 61.8 golden zone area, although it broke the trend line, it was a fake out and it went back the other way. So if you can use this fib strategy in conjunction with your trend line, it's going to be powerful, guys and gals. Okay, guys, so I just wanted to make a quick video. I haven't seen this, like I said, out anywhere, so I said let me go ahead and make this video because it's very powerful once you master it, and it's going to take your trading to the next level. Okay, guys, so that's it for this video. Again, guys, if you're liking the content, I have some way more powerful stuff than this. This is next level. But if you look around YouTube, I'm telling you, you're not going to see this anywhere. I haven't found a video. It may be one or two, but I haven't saw them yet. I see the typical, you know, they put the fib here, put the fib there, but never do they align it with the trend line. And with that combination, your trading is going to be powerful, people. All right, guys, I hope you enjoyed this video. Hit that subscribe button. Until next time, happy trading.